Inflation is a silent killer of wealth, and it affects everyone. Over time, the value of money goes down and the cost of living goes up. If you're not prepared, inflation can erode your savings, retirement funds, and investments. But there are ways to fight back and protect your money. In this finance video by Finance Aligned, we'll share tips and strategies to help you fight inflation and keep your money safe. We'll cover everything from investing in inflation-protected securities to minimizing debt and expenses. You'll learn how to build a diversified portfolio, hedge against inflation, and take advantage of rising interest rates. Whether you're a beginner or an experienced investor, this video will provide valuable insights and practical advice on how to protect your money from inflation. Don't let inflation eat away at your wealth. So watch this video and take control of your financial future. First, let's talk about what inflation is and how it affects your money. Inflation is the rate at which the general level of prices for goods and services is rising. When inflation occurs, the purchasing power of your money decreases, which means you can buy less with the same amount of money. This can be especially harmful to your savings, retirement funds, and investments if you're not prepared. So, what can you do to protect your money from inflation? Number 1. Begin by cutting costs on shopping. According to data from the Bureau of Labor Statistics, the cost of groceries increased by 10% for the year ending in March 2022. All food categories have seen price increases, but some have been struck harder by inflation than others. The price of meat grew by 14.8%, the price of fruits and vegetables by 8.5%, and the price of pasta and grains by 9.3%. Sadly, the cost of food is not expected to stop rising anytime soon. Here are some strategies for cutting grocery costs. Choose affordable foods. One strategy to save shopping expenditures is to eat more vegetarian meals, as meat is one of the food items with the highest inflation-affected prices. Use simple ingredients like pasta, rice, dried or canned beans, potatoes, eggs, and beans to create your meals. Fruits and vegetables that are canned or frozen typically cost less than those that are fresh, and you can save money by switching from name brand to generic products without detecting a significant difference. Create a meal plan. To avoid making impulsive purchases or relying on takeout during the week, make a weekly meal plan. To save even more money, look for recipes that call for products you already have in your pantry and refrigerator, or create a menu using the weekly sales flyer from your local grocery shop. Try to stick to your shopping list, and go to the supermarket with a full stomach to prevent impulsive purchases that could blow your food budget. Make comparisons. In order to decide which choice offers the most value, compare the cost of groceries by weight. Additionally, you may be able to save money by purchasing necessities like pasta, canned foods, pancake mix, or toilet paper in bulk from shops. Number 2. Start reducing your transportation costs. The price of gasoline increased by 38% between February 2021 and February 2022. According to AAA, the national average cost of gas was $4.12 at the end of April 2022. Your first line of defense could be to minimize your driving if rising gasoline prices are ruining your finances. Ask to work from home more frequently if your job permits, and you can also save money by grouping your errands, participating in carpools, or using environmentally friendly modes of transportation like public transportation, biking, or walking wherever possible within close range. By taking advantage of the fuel savings programs at your nearby gas station, you might be able to save money at the pump. For example, several gas station chains give discounts to customers who sign up for text messages. Finally, think about reducing the cost of your auto insurance. Based on factors like your credit score and driving record, you might be eligible for a lower vehicle insurance rate than the one you're currently paying. Number 3. Always check and stick to a budget. As your objectives and spending patterns evolve over time, it is usually advisable to check your budget on a regular basis. And when sudden price spikes make your budget even tighter, it's even more important to review your expenditures and include savings in your plan. See how your spending compares to your goals if you are already keeping track of your expenditures in budgeting software or a spreadsheet. Are you staying within your budget if you've set restrictions for specific categories? If you find that you are living beyond your means, either modify your spending goals to make sure you are allocating enough to each category or decide to cut back on spending. You should begin using a budget right away if you aren't already. Find areas where you can cut back. Do you have a gym membership that you don't use? Are you blowing up your cash on a bunch of subscription services you don't need? Overspending on shopping due to a limited budget? You can experience a rise in income flow right away if you spend less on these things. Number 4. Reduce your credit card debt. Another way to fight inflation is to minimize debt and expenses. Debt can especially be harmful during inflationary periods because the cost of borrowing goes up and your debt becomes more expensive to repay. By minimizing debt and expenses, you can reduce your financial obligations and free up more money to invest in inflation-protected assets. It can be tempting to use credit cards to cover your bills as the cost of almost everything rises, but taking on debt can strain your finances, and as the Federal Reserve increases interest rates to fight inflation, credit card debt may even become more costly and challenging to pay off. The key to paying off your credit cards is to always make more than the minimum payment due. You can use these strategies to make higher debt payments and pay off debt more quickly. Use a debt repayment strategy. Making active repayments on one card at a time using the debt snowball or debt avalanche methods can help you keep motivated or result in interest savings. Consider a debt consolidation loan. Consolidating your credit card debt into one loan can help you manage your debt by allowing you to make just one payment each month, ideally at a reduced interest rate. Even so, before applying, make sure your score entitles you to higher terms. If you do receive a loan, commit to yourself not to use your credit cards. Otherwise, you risk getting into even worse trouble. Number 5. Start investing. Another strategy is to invest in inflation-protected securities such as Treasury inflation-protected securities, TIPS. These are bonds issued by the US government that provides fixed rate of return plus an adjustment for inflation. This means that your investment will keep pace with inflation and you'll be protected from losing purchasing power. Another strategy is to diversify your investment portfolio. This means investing in a variety of asset classes such as stocks, bonds, real estate, and commodities. By spreading your investment across different asset classes, you can reduce the risk of losing money in any one investment if inflation hits one sector harder than others. Number 6. Begin hedging. Lastly, hedging is one of the most effective ways to protect your money from inflation. Hedging means taking a position in an asset that is expected to perform well during inflationary periods. By doing this, you can offset the negative effects of inflation on your portfolio and potentially earn a profit. One of the most popular ways to hedge against inflation is to invest in precious metals such as gold, silver, and platinum. These metals have historically held their value during inflationary periods and are considered safe haven investments. When inflation rises, the demand for precious metals tends to increase, which can drive up prices. Another way to hedge against inflation is to invest in real estate. Real estate has also historically been a good hedge against inflation because property values tend to rise with inflation. This is because the cost of building materials, labor, and financing tends to increase during inflationary periods, which can drive up the cost of new construction. This can lead to higher property values and rental income, providing a hedge against inflation. Commodities such as oil, gas, and agricultural products are also considered good hedges against inflation. When inflation rises, the demand for these commodities tends to increase, which can drive up their prices. This can lead to higher profits for investors who own these assets. In addition to these traditional hedging strategies, there are also inflation-protected securities, such as Treasury inflation-protected securities, TIPS. These are bonds issued by the US government that provide a fixed rate of return plus an adjustment for inflation. This means that your investment will keep pace with inflation and you'll be protected from losing purchasing power. Hedging is a powerful tool that can help you protect your money from inflation. By investing in assets that are expected to perform well during inflationary periods, you can offset the negative effects of inflation on your portfolio and potentially earn a profit. Whether you choose to invest in precious metals, real estate, commodities, or inflation-protected securities, hedging can be an effective strategy for fighting inflation and protecting your money. Inflation is a reality that affects everyone, but there are ways to fight back and protect your money. By investing in inflation-protected securities, diversifying your portfolio, hedging against inflation, minimizing debt and expenses, and taking advantage of rising interest rates, you can keep your money safe and secure. And there you have it. Did you find this video helpful? Kindly let us know your thoughts about this video in the comment section below. Don't forget to like this video and subscribe to our channel for more educational content like this. See you next time. Thanks for watching.